Hold on to your hats because Palantir, ticker symbol PLTR, is one wild stock. It's like a rocket ship blasting off into the unknown. This company is not for the faint of heart. The stock can feel like a falling knife, unpredictable and dangerous. It's been on a roller coaster ride since its IPO with dizzying highs and stomach-churning lows. Right now everyone's asking, is it too late to jump on board? Or is there still time to catch this rocket? Palantir is a tech company that specializes in big data analytics, a field that's growing rapidly. They're all about helping organizations make sense of massive, complex datasets, turning chaos into clarity. Think government agencies, intelligence communities, and big businesses. These are their primary clients. Palantir has been making waves with its artificial intelligence advancements, pushing the boundaries of what's possible. They've been on a tear, securing new clients left and right, expanding their influence and reach. But, and this is a big but, is all this good news already baked into the stock price? That's the million-dollar question. The stock market is a fickle beast, full of surprises and uncertainties. Sometimes it seems like companies can do no wrong, riding a wave of success. Other times, it feels like the sky is falling, and nothing can stop the downward spiral. Palantir is a classic example of this phenomenon with its volatile stock price. Investors are trying to figure out if Palantir is the real deal, or just another overhyped tech company. Is it a game changer, or a flash in the pan? We're diving deep into Palantir to see if this stock is a rocket ship to riches or a falling knife you should avoid. The stakes are high. Buckle up because this is going to be a wild ride. The journey with Palantir is anything but smooth. Let's break down what Palantir actually does. Palantir has two main platforms, Gotham and Foundry. Gotham is like something straight out of a spy movie. It's used by intelligence agencies and defense organizations to identify patterns and track down bad guys. We're talking serious national security stuff. Foundry is a bit different. It's designed to help businesses make smarter decisions. Think of it as a super-powered data analysis tool. Companies can use Foundry to optimize their operations, manage risk, and even develop new products. Gotham and Foundry are incredibly powerful tools. They're used by some of the biggest names in the world. But, and this is important, these platforms are also incredibly complex. They require a lot of expertise to use effectively. That's why Palantir focuses on selling to large organizations with deep pockets. Palantir went public in September 2020 through a direct listing. It was one of the most highly anticipated IPOs of the year. Investors were excited about the company's potential to revolutionize data analytics. However, the stock's performance has been anything but smooth sailing. After an initial surge, Palantir's stock price experienced a significant pullback. This is not uncommon for high-growth tech companies. Investors are often quick to buy into the hype, only to sell just as quickly when growth doesn't meet their lofty expectations. In recent months, Palantir's stock has shown signs of life. The company has been reporting strong earnings growth and signing new contracts. This has led some analysts to believe that the stock is poised for a rebound. However, others remain skeptical, arguing that the company's valuation is still too high. Palantir's bread and butter have always been government contracts. They've worked with agencies like the CIA, FBI, and Department of Defense. These contracts are worth billions of dollars. They provide Palantir with a steady stream of revenue. However, Palantir knows it can't rely solely on government contracts forever. They've been making a big push into the commercial sector. Palantir sees a huge opportunity to help businesses make better use of their data. This commercial expansion is starting to pay off. Palantir has signed deals with companies in industries ranging from healthcare to energy. These commercial contracts are crucial for Palantir's long-term growth. They help diversify the company's revenue streams and reduce its dependence on government spending. Section 5, AI-powered growth. Palantir's new ace in the hole. Artificial intelligence, or AI, is the hottest thing in tech right now. Everyone's talking about it, from tech giants to startups. Palantir is no exception. They've been investing heavily in AI for years, recognizing its transformative potential. They believe AI is the key to unlocking even more value from data, making sense of vast amounts of information. Palantir's AI tools are designed to automate complex tasks, reducing the burden on human workers. This frees up human analysts to focus on more strategic work, such as decision-making and planning. For example, Palantir's AI can be used to detect fraud, identify potential security threats, and even predict customer behavior with high accuracy. These AI capabilities are a major selling point for Palantir, attracting a wide range of clients. They give the company a significant competitive advantage in the tech industry. As AI continues to evolve, Palantir is well positioned to benefit from this rapidly growing market, staying ahead of the curve. However, it's important to note that AI is still in its early stages of development with much room for growth. There are still many challenges that need to be addressed, including ethical concerns and technical limitations. Section 6. The competition heats up. Can Palantir maintain its edge? Palantir isn't the only game in town. The data analytics market is becoming increasingly crowded. Palantir faces competition from both established tech giants and up-and-coming startups. Companies like Microsoft, Amazon, and Google are all investing heavily in data analytics. They have vast resources and a global reach. This makes them formidable competitors. At the same time, there's a whole ecosystem of startups developing innovative new data analytics tools. To stay ahead of the competition, Palantir needs to continue to innovate. They need to keep developing new and cutting-edge AI tools. They also need to find ways to make their platforms more accessible to a wider range of customers. Section 7. Valuation. Is Palantir's stock price justified? Now, let's talk about the elephant in the room, Palantir's valuation. Even after a significant pullback, Palantir still trades at a high multiple of its sales. This means that investors are betting on significant growth in the years to come. Some analysts believe that Palantir's current valuation is justified. They point to the company's strong revenue growth, large addressable market, and first-mover advantage. Others are more cautious. They argue that the company's valuation is too high given the competition it faces and the risks associated with its business. Ultimately, whether or not Palantir's stock price is justified depends on your individual investment thesis. If you believe that Palantir can continue to grow its revenue and earnings at a rapid pace, then the current valuation may not be a deterrent. However, if you're more risk-averse, you may want to wait for a pullback before buying in. The stock market is unpredictable, and timing your entry can be crucial. It's essential to consider broader market trends and how they might impact Palantir's performance. Always do your own research and consult with financial advisors. Section 8. The bull case for Palantir. Reasons for optimism. Let's start with the good news. There are several reasons to be bullish on Palantir's future. First, Palantir operates in a massive and growing market. Data is being generated at an exponential rate. This data explosion is only going to continue. This creates a huge opportunity for companies like Palantir that can help organizations make sense of all this data. Second, Palantir has a strong track record of innovation. They've consistently developed new and innovative data analytics tools. This has allowed them to stay ahead of the competition. Their focus on AI is particularly promising. AI has the potential to revolutionize the data analytics industry. Third, Palantir has a sticky customer base. Once a customer implements Palantir's platforms, it's very difficult to switch to a competitor. This is because Palantir's platforms are deeply integrated into their customers' workflows. Section 9. The bear case for Palantir. Proceed with caution. Now, let's talk about the risks. There are also several reasons to be cautious about investing in Palantir. First, Palantir is a controversial company. They've been criticized for their work with government agencies, particularly those involved in intelligence gathering and surveillance. This has led to some investors boycotting the stock. Second, Palantir is a complex business. Their platforms are not easy to understand or use. This makes it difficult for investors to assess the company's true earnings potential. Third, Palantir faces significant competition. As mentioned earlier, they compete with both established tech giants and up-and-coming startups. This competition is only going to intensify in the years to come. Section 10. So, is it too late to buy Palantir stock? The short answer is, it depends. There's no doubt that Palantir is a risky investment. However, there's also the potential for significant rewards. If you believe in the long-term potential of data analytics and AI and you're comfortable with the risks involved, then Palantir could be a good investment for you. However, if you're risk-averse or you're not convinced by Palantir's story, then it's probably best to stay away. There are plenty of other fish in the sea. Remember, investing is a marathon, not a sprint. Don't let emotions cloud your judgment. Do your research and make an informed decision. Section 11, Disclaimer. I am not a financial advisor. This is not financial advice. Please do your own research and consult with a financial professional before making any investment decisions.